Hello and welcome to Insurance Business TV for our third power panel looking at the cyber insurance market in New Zealand and the challenges faced by brokers there. We've assembled our experts. Damian Schade is Client Director of Professional and Financial Risks at Lockton. Decklyn Thomson is a commercial broker with GSI Insurance Partners. And Jono Soo is Head of Cyber New Zealand for Marsh. All our guests are in Auckland. Well, welcome to everybody. And let's start, as we often do, by testing the temperature of the cyber market. I mean, how is this soft or softening cyber market looking, and where is it softest, do you think? Damian, let's start with you.
Thanks, Daniel. Nice to see you again. Yeah, look, it's been, I dare use the word status quo, but it's been very, very sort of consistent over the last sort of 3 to 6 months. Still plenty of capacity and plenty of insurers, still quite aggressive on pricing. And still quite a lot of competition in that sort of SME range. So yeah, we're very much seeing still multiple options for clients, whether you're an SME or whether you're sort of a large corporate. Certainly probably more competition at that lower sort of medium end rather than up top. And those higher risk industries are still a little bit challenging. But yeah, so it's quite an interesting dynamic.
Declan, are you seeing the same interesting dynamic, a lot of competition?
Yeah, thanks again for having us. Daniel, I would say so. Yeah, I think I'll reiterate Damian's point that I think especially for the SME space, there's a lot of competition out there with especially some of the newer insurers and that kind of thing that have recently entered the market. I do also think that we're seeing a lot of interest from insurers on the corporate and high value sort of accounts. So I think it's I don't know how long this will continue, but I would say that, yeah, things have definitely been a softening market over the last 3 to 6 months or so. So, yeah.
Jono, it's hard being in third position there, coming in with insights, but I guess to change the question slightly, how long this is going to last is one question, but I mean, are you seeing this softening going on for a while, and how do you see it right now?
Yeah, thanks, Danny. Good to be on again, guys. Look, I'll say it's surprised us as to how long this softening is, and I think we all probably expected it to bottom out by now, but it's still, it's still trending downwards and getting sort of more competitive by the day still. But I think the chat is we sort of look maybe to other markets like the US market where things are actually the decreases are lessening or actually going flat now. So I'd say, realistically, but we've got probably till the end of the year, and then we'll be really interesting to see what happens by 1 January as the reinsurance starts to review things.
Jono, let's stick with you. This is a question that is of interest to brokers, I'm sure, and to me as a journalist. This kind of anomaly in the cyber market where there's loads of attacks coming in, but the premiums are still coming down. What do you make of that? Is there an explanation?
Yeah, a bit of a strange anomaly, isn't it? I think it sort of goes against the grain as claims took up that it's the capacity and the premiums are still really competitive. But I think we're it's a bit of a crux or inflection point of the market. That the claims they're obviously coming in and testing policies as they should be. So it's really nice to see that policies are responding and expected to. So I'd say a lot of it is of the resilience built into the market as well over the last 3 to 4 years. They've expected these claims to come through eventually. So it's not really a knee-jerk reaction like we saw back in 2020 and 2021. So, as things do inevitably turn and harden again, we likely won't see the volatility that we saw a few years ago, which is what we all want to avoid. So look, I say in the region anyway, capacity is still really abundant. The insurers, internationally are also wanting to target risks in the region to sort of diversify their portfolios. So that's really explaining a lot of that sort of capacity competition coming through as claims also increase.
And Damian, how do you see this? How do you read this anomaly between the attacks going up and the premiums coming down?
Yeah, I mean, anomaly is a great word, Dan. It is really hard to comprehend because insurers are telling us about the claims, the media is telling us about it, sort of the events, the breaches, the issues sort of in New Zealand and globally, but there's still more competitors coming into the market. They're still trying to drive the premium down. So it doesn't make a lot of sense from a commercial point of view. But I agree with Jono's comments. I think we're certainly seeing globally some of the rates start to slow a little bit. So we will sort of see a bit of a flattening out and sort of some trajectory upwards, probably pushing into next year, because we can't keep seeing sort of the same level of competition. We can't sort of too many mouths to feed, I think, for the volume of business, particularly for our New Zealand clients. So yeah, anomaly is a great word because it is quite a hard one to articulate to clients.
And Declan, how do you see it? And are you noticing this is a bit of a perhaps inflection point like your colleagues are?
Yeah, I would say so. I think, like, just to add on to Jono's point, I think as well that in terms of claims over the last few years, the insurers have more claims data now than they obviously have ever had previously. So I think that there's a lot more understanding of the risks, and there's probably going to be some more sustainable pricing models and that kind of thing moving forward. I think also just generally, I would expect that globally the uptake of cyber insurance is on the rise. So anytime that there's a market for premiums and premium pools, it's gonna pique insurer interest. So they want to remain involved. They want to remain competitive and that kind of thing. So I think we're seeing sort of the consequences of that.
I wasn't at the UAC Expo in Auckland, which was yesterday. We're recording on a Friday, but Tim Grafton there was talking about this challenge in the soft market where you've got more competition, the pressure's on, but the rates are coming down. I suppose the other question here is, I mean, how are you dealing with this situation yourself, Declan? I mean, how do you deal with the soft market challenges?
It's a great question, Daniel. I would say that from a broking perspective, I think the attitude I've taken is just to be fair, try and be as fair as I can to both insurers and clients. I think that it is a soft market, so we are setting that expectation with the client, but at the same time, we're not chasing the lowest premium. I think it's important to work with your clients and advise clients on things like stability of coverage, general insurer appetite changes. And, if we look back a couple of years ago, when insurers were offering a lot under their policy wordings, and then literally the year after started to make some pretty heavy reductions on things like the crime coverage and social engineering coverage and that kind of thing. So advising clients or helping clients understand that there are some insurers that maybe long-term stability and long-term sustainability of their coverage offerings is something to be considered as opposed to just pricing.
And Jono, what are a couple of your strategies in this soft market?
Yeah, I'd say it's from a geoprocess perspective, I guess every market, so every account probably needs to be at least have a targeted remarket just to test the alternatives. And again, I probably said it a few months ago or 6 months ago, but if you're not marketing your account properly, your competitors will as well. So you got to make sure that you're doing the due diligence right for your clients. I think again, if we're just building on Declan's point, you don't want to move an account just for the price. And we do see sometimes some quotes coming through which are well out of step with some of the other peers. And that obviously does get questioned by clients. They do question, why is this premium, 70% cheaper than the other ones? And so, yeah, certainly, raising the question of sustainability going forward, and we want to avoid that volatility as well, because if you're seeing 70% reduction this time, in 12 months time you don't want to see a 70% increase. So yeah, it's definitely that long-term game which clients need to consider.
And Damian, coming to you, sustainability, is that one of the things you have to watch out for in this tempting market, I guess?
Oh, absolutely. I'd like to disagree with the gents, but I have to fully agree with most of the comments there. Yeah, I mean, I think the big point I'd kind of reiterate is around that sustainability piece. It's actually working with a long-term insurer that's going to be there through the ups and downs. It's sort of easy when everyone's sort of fighting for a race to the bottom, but you want to know from a client perspective, are they going to be there in 2, 3, 5 years time? Is their pricing going to be sustainable? So it's probably, my view, it's always better to sort of maintain that sort of relationship rather than chop and change insurers every year based on who's the lowest common denominator. So it's about making sure your client's aware of that. And if they're aware there's more competitive pricing and they're happy to be elsewhere, then that's kind of a decision that they can make.
And Damian, sticking with you, let's switch and look at your relationship with the insurer. What are they particularly looking for right now in the submissions you're putting in from clients?
I think they're still looking for the same key risk control processes that they usually look for. It generally tends to be the sort of the 4 key areas that they're really, really focused on, particularly for smaller clients. So they want to know that you've got your multi-factor authentication. They want to know that you've got a process for managing your data and storing your data. want to make sure you've got protection on all your end devices. They want to make sure that you provide your standard support to your employees through doing regular cybersecurity exercises. So those sort of basic things, if you've got those in place, then they're generally pretty happy to proceed, and then it goes from there. So there's sort of the key components they're still looking for to put coverage out.
And Declan, are you noticing anything different being requested by insurers at the moment, or is it business as usual?
Maybe not so much different, but just definitely, I'd say there's a lot more focus on some of the maybe higher value accounts and that kind of thing around not only some of the base cybersecurity, but also being able to build back up. Like I'm liking what I'm seeing from insurers in terms of wanting to get an understanding of business continuity plans and disaster recovery plans and that kind of thing, especially around critical IT infrastructure. I think that's not only a good thing for insurers, for clients, but also just really great for us to be able to have conversations with clients around general best practice risk management processes and getting things like that put in place. So it's kind of refreshing and like I said, I think a really positive thing for all parties to put a bit more of focus around business continuity planning and resilience and that kind of thing. So.
And Jono, coming to you, what are you seeing from the carriers you work with? What are they asking for in the submissions?
Yeah, I think sort of apart from sort of the standard controls, still obviously a bit of a focus on, vendor management and that supply chain risk. So that's not really going away. I think that's the thing which tends to still scare a lot of the markets is when that big supply chain goes down or some big event in one of the major cloud providers. How's the how all the insured's going to sort of react to that or come back from that. I'll say, if anything, the focus for the markets right now is still, it's really sort of back to the increasing policy count, and they are underwriting a lot less conservative than they did 6 or 12 months ago. So if anything, they're focusing on growing that premium pool more than anything else. So just in a sense, sort of gambling how much capacity versus premium they get.
Jono, I'd like you to get out your crystal ball, be the first to do this. Where do you see the cyber market going in the months ahead?
Yeah, as probably mentioned, 5 minutes ago, Jan 1st is that's the test date. That is going to be really interesting. I think we should all have a nice summer, and then we'll come back and see what's coming out of the London reinsurance markets and all those carriers and what all those new sort of treaties and contracts will be with where they need to play. So that's obviously what we saw. I say Jan 1st 2022 as things harden rapidly. Hopefully we don't see it hardening as quickly as we did, but I think that will be a real key date for us.
Damian, are you expecting hardening, do you think?
Yeah, I think so. I think sort of here towards sort of the start of next year and progressing on, I think we'll certainly see those rates sort of push up. I just think insurers will be a little bit more, agree with Jono's comments that in Decklyn's, the risk count's going up. They've got a lot more data that they can sort of use as a base. And I think it'll take and there's obviously events happening so regularly, there'll be some sort of significant cyber-related event that they might use as a base for going, hey, this is happening. So that the rates are pushing up. Insurers tend to generally do that, even if it's not particularly related to them, use it as a base to sort of, adjust their rating.
And Decklyn, you get the final word in our power panel. What do you see coming up?
I guess, so aside from, the pricing conversation, one thing that I'm really interested to see with some of the maybe MGAs and that kind of thing that have introduced themselves into the market is how they improve their cyber offering over the next 12 months or so. I think they've got kind of base cyber offerings, SMEs and that kind of thing. But as we've seen with some of the other MGAs in New Zealand, generally that tends to improve over a few years until it's full-fledged, pretty comprehensive cyber offering. So I'm pretty interested to see how that pans out or so. And then, I guess I'm liking that insurers are looking to look at cyber as standalone risks, as opposed to previously it was we need to look at the whole liability program in order to consider this. And I'm liking that insurers are a little bit more willing now to look at standalone cyber and that kind of thing. So I'm hoping that continues whilst whatever happens with pricing. I'm hoping that sort of appetite and interest in cyber continues with the insurers. So I guess that's my final thoughts.
Great. Well, thank you, Decklyn. We'll be watching closely in the months ahead, and thanks to all our guests. And that wraps up our cyber insurance market power panel for New Zealand. Thanks for watching Insurance Business TV. Bye for now.